Stephanie and I are here with a man who pretty much needs no introduction, but we'll give you one anyway. He is Barry Sternlicht. He's the chairman and CEO of Starwood Capital Group. He's a renowned real estate investor who oversees more than $20 billion in assets. Barry, it's been too long. Thanks for coming back.
Good to see you again.
So, where do we start? We could start any number of places, but let's talk about investing for a minute. And we'd like to begin with your macro view. Every investor needs a kind of a macro view, and we want to know where you see the world going, what do you think is going to happen, and how is it influencing or affecting your investment decisions?
A simple question.
Yeah, it's easy, right?
Actually, it's interesting.
But just teeing it up for you there. You just have to,
I was talking to some people this morning, and I never thought the macro has never been more important in investing, because you have to come at your investments today with some kind of philosophy.
Right.
And the key one is, where do you think interest rates are going to be? Because particularly in real estate investing, today interest rates are historic lows, but where will they be when you try to exit your investment? And will the debt that you put in place today be more valuable than the real estate you're buying? Because you're going to lock in. We just financed a hotel acquisition, 60% financing at like 4%. And that's just fantastic. We've got a construction loan on a multifamily project at 2.5%. So a lot of things work, and it is creating some motion in the economy, by the way. But our great fear is that the government keeps tinkering with the financial markets, particularly domestically, with QE4, I guess we're up to. And it's not a normal, it's a subsidized interest rate climate, and it feels weird, and it's preventing the kind of real investment I think the government would like to see and the politicians would like to see. So my macro view is you got to do stuff with big margins of safety, because Europe could still go over the cliff. And we're trying to invest where we can get very high current cash yields up front, so take some weight off the guesstimate of what the assets might be worth 5 to 10 years down the road. I think our view is that there is latent inflation in all this money printing around the world, and someday that might manifest itself. If it doesn't, interest rates stay low. Real estate's a really interesting asset class because we produce cash flow and yield. And real estate does fine in that environment, probably as long as there's no net destruction of demand and the economy doesn't go way south. If interest rates rise, hopefully it's because inflation is good inflation, I'll say, not hyperinflation, good inflation, that wages have gone up and maybe some commodity prices have risen. That's actually a good time for real estate too, because many parts of real estate will participate particularly well in an more inflationary environment. So I think the asset class is in a sweet spot for investors worldwide. And but I think you have to be super careful, and particularly careful about growth assumptions in rents and other things.
Is it getting overbought in any way, though? When we hear firms like Blackstone, who've gotten so massive, that's their main focus, and more investors getting into the real estate space, are things getting too competitive? Is the cheapness out of the game?
You're not making a real estate bet. You're making an interest rate bet. You're betting that rates will stay low for a long time, and in many ways I think some of the things that Blackstone's done is really betting interest rates. They're betting that rates will stay low and be low when they exit these investments. So you can lever 80% today. There's plenty of debt. Some people ask me, well, you can't finance stuff. You can finance almost anything you want. If you're a creditworthy borrower and you have good relationships in the banking community and you treated most of the banks well in the recession.
But can the banks actually offer financing right now? I mean, the more we hear, banks are closing up shop in that regard. I mean, closing up shop, but not for Barry Sternlicht.
Well, actually, we passed the $10 billion borrowing mark the other day. In the last 2 years, we borrowed $10 billion. So the head of my finance team told me that. And I was like, wow, that's pretty impressive. Because we actually haven't done...
Somebody turned that into a tombstone for you.
$10 billion. But that's... And then we have had, I think, 100 different institutions that we've borrowed from. And we see all kinds of... The banks are actually sitting on plenty of capital, and real estate happens to be one place they're actually more comfortable lending, because if you think of a company today, first of all, most companies are sitting on cash. Second of all, nobody knows exactly what their growth is going to look like. So the banks are kind of, and they also have the capital markets to go to. So record issuance of investment-grade debt yesterday. I mean, they are able to borrow. Toll Brothers, which is a real estate company, borrowed money yesterday at 50 basis points with a conversion price up 50% off the stock. And this is free money. This is the most liquid, cheapest capital I've ever seen.
So to your point earlier, though,
in real estate,
these low interest rates are getting things moving.
Yeah.
Certainly moving for Starwood and Barry Sternlicht. Does that maybe suggest, it sounds like quantitative easing and other similar policies are working? Are they just, in your view, not working as well as they should be working?
I think they're not working. I mean,
They're not working.
I think they have a counter force, which is worse than the positives of them.
And people are waking up to that.
Well, every time the Fed says they're not raising rates, like we're waiting for Bernanke, I don't know if he said it, to 2015 instead of 2014, you say, well, rates aren't going up, so I don't have to invest today. I don't have to borrow money and build that plant or make those investments because I'm not facing a rising interest rate environment. Second thing is it's creating bubbles. It is definitely inducing bad behavior. My mom calls me up and says, I need something with yield. Right? So they go off in the high-risk spectrum because she's a saver, she's retired, and she can't invest in anything other than and they'll do things, they'll get teased into investments because of the current yield. And perhaps mom happens to be smart, but perhaps people won't be doing things. I had to do that for my mom, by the way. They'll do stuff they shouldn't do with their money, with their saving money, because they need yield to sustain their livelihood. I think you'd be much better off if short rates were 2%. It actually would have an interesting effect, in my view. It would, the yield curve, which say the 10 years 158, would probably be flat, 2%, because that would be a break, a little break. But the government wants jobs, and they need investment to create jobs. They need us to open factories, open stores, build buildings, hire construction workers. And everybody knows this is not a normal interest rate environment. This is weird. And it's preventing, that's why you have $3 trillion, almost $3 trillion of cash on corporate balance sheets. We don't know what the rules of engagement are, and we know that this is a subsidized interest rate world. So I think it actually has a worse countervailing. The housing market, by the way, is going to correct on its own, and most people are now trying to borrow 10-year and 30-year. The short end does not come into it. People aren't really borrowing off the short. They're trying to lock in. Homeowners are pretty smart. They're trying to lock in. And the issue with the housing market would be much better if people could get loans. But because of the credit crisis, the banks have gotten stricter in underwriting, and you can't borrow 105% of the house you want to buy.
Barry, earlier you were talking about real estate really as an interest rate play. But when I think about it, it's also about the economy. I mean, are people going on vacation? Are they shopping in malls? So in that space, are you looking to the luxury end or really the budget?
Actually, both ends. That's interesting.
There's opportunity.
There's opportunity in both. I think let's start with the malls. We just bought $1 billion of malls. So why do we buy them?
Because you love Orange Julius.
How'd you know?
I was just feeling.
The number one. First of all, I think the death of the mall is probably greatly exaggerated, and I think that the mall is a little like the movie theater. It should have been displaced and shut by technology, but it hasn't been because it's a social event. So going to the mall with your girlfriends or your boyfriend and going through 14 stores and trying and tactilely feeling all those fabrics and seeing exactly how it fits on you is hard to replace. And on the margin, it's going to affect stores. But there are certain categories that have already migrated to the web, like TVs and hard goods, because there's no, and that's not typically, we don't have a lot of appliance manufacturers in malls. So actually what's happening is the big box retailers, the Best Buys, are struggling because their formats are too big. And people are going to be very custom with the new apps to shop online. They'll go into the store almost like a showroom. So and tenants are migrating into malls, actually. They don't need the space, and there's demand generators, the highway systems are good. There's other attractions in the mall. So the mall is evolving as a meeting place. And we thought relative, again, on we can buy them at a reasonably good yield, and we can finance them fairly tightly because they are dominant, diversified cash flow streams from many tenants. And we thought it was an interesting place to make our first big investment in the mall sector in 20 years I've been running Starwood Capital. And it was a pretty contrarian bet because everyone's saying malls stink. The other big play here will be at some point somebody in Congress is going to wake up and tax the internet. Right? I mean, this is enough. Amazon's worth $250 billion. It's no longer a startup. It's one of the largest market caps in the market, and you're crushing mom and dad stores because they get the subsidy, you don't pay taxes. That's absurd at this point, and that should be changed. And the school municipalities that rely on these revenues from these stores in these towns, they've got to change this. They've got to tax the internet. It has to be equal playing field. You're hurting the bricks and mortars, and it's the brick and mortar that we pay real estate taxes that pay for city school systems. So that's silly, and I think it's going to begin to change. The other thing, as far as luxury and budget, I think that the world unfortunately has evolved to haves and have-nots. Right? You hear about it. Obama talks about it. There's unfortunately not a lot of upward migration in the middle class, and in the lower income classes, that's a disaster, and that's a separate topic. But They shop also, and they're budget conscious. And so the budget area is something we've invested in. And then the luxury area where people really are about high service is also something we've invested in.
You made a provocative remark just a few minutes ago about inequality, and it made me wonder, from your standpoint, from where you sit, is inequality a good business?
Is inequality a good business?
Yeah, in the sense that you can cater to the high end, you can cater to the low end, you don't really have to worry about the middle, no?
Not a good business. You'd like the middle, the biggest part of the market, the middle class, to be prospering. And there, there are social instability issues that come out with the two ends of the spectrum. They just happen to be where you see it. You see it in sales. Walmart sales aren't good, but Neiman Marcus is really good. It's affecting real estate, right? High-end apartments in New York City, there's tons of demand, but people are having to, as rents go up in multifamily, people are trading down because their incomes are going nowhere. They just can't afford it. So it's impacting real estate markets, this mess we have in the U.S. But I think if you want to talk social issues, I mean, it's all about our education system, right? We're seeing I think you're seeing the result of a failed public school education system in our unemployment rates and our structural unemployment. So to fix this problem, to take people out of poverty, you have to fix education. And it's a long-term solution, but it's desperately needed, and that's why the U.S. ranks 7th in competitiveness now. We're not training our people. So, and our government's investments are not in, there's no ROI on what they're doing. Giving me a $500 payroll tax deduction doesn't do anything for anybody. I mean, it makes me feel a little better. Maybe you bought my vote, but you didn't create a job. And you really didn't, because we might take that $500, and if we spend it at all, if we didn't pay off our mortgage or pay off our credit card debt, we might have gone out and bought a Nintendo or bought some TV made somewhere in Asia.
But is this a government issue, or is this the way the American people live and work and spend their money issue? They would rather have $100 in their pocket today than have a long-term savings plan.
I'm going to be an optimist and say that the American people kind of understand what's going on. And, whether you can invest in job training programs or partnerships with community colleges, or help people get trained for the jobs that exist with public-private partnerships, invest in infrastructure. There's returns on those investments. There's an ROI. If you're a businessman, there's an ROE. There's a return on equity. There is none in what they've been doing. These $100 billion payroll tax deductions don't do anything. And they don't fundamentally address the issue of the inequality, which really stems from no upward mobility because you don't have the job skills.
But individual Americans continue to get in massive personal debt. We talk about the debt crisis, we say it was all banks. Individuals put themselves in debt, and they haven't changed their behavior. So how does one change that sentiment?
I think it's about individual responsibility, right? And I think part of it is we got to teach people that there's consequences. I mean, the whole housing crisis is very complicated. Whether we talked earlier about whether you can kick a person out of a house when he's not paying the mortgage payment. I mean, there's the guy next to him who didn't borrow money and used his life savings to borrow the house. Or as Lou Ranieri said at a conference I recently attended with him, he said, "How do you feel about that guy who's refinanced his house 6 times in the old housing bubble, took a couple $100,000 out, and now not paying his mortgage? You feel it's un-American to throw him out of his house?"
Barry, if inequality is a huge problem, if the crumbling education system in this country is a huge problem, and if leadership, or lack of it, more precisely, is the problem, where do we go from here? You've described yourself in the past as a fiscally conservative, socially liberal person. I can think of dozens of people just like you, maybe hundreds, there may be thousands, business leaders in this country who share that view. Which of the two? We've got 2 choices. Mitt Romney and Barack Obama is going to provide the right leadership to correct those problems.
Well, I think it's correct. I don't agree with the social policy of the Republican policy, but I think this is black and white. I think you have to vote for the Republican. You have to vote for Mitt. And I think... And
this is from, you have been pretty much your whole life, if I'm not mistaken, a Democrat, right?
Pretty much. I mean, not really. At 92, the convention, the Republican convention.
But mostly Democrat, you're endorsing
That's when I switched over. Yeah, I mean, I've always thought the separation of church and state was the foundation of our country, and I always thought that a woman's right to choose is her right to choose. I don't think gay marriage is an issue that is at the top of the forefront of issues facing this nation right now. If you don't fix this economy, if you pile on $5 trillion of debt, I can't even imagine what the consequences will be when we have $20 trillion of debt and it's a normal interest rate environment and you're paying $500 billion a year of interest expense to the Chinese. or to foreign owners of our debt. I mean, it's not an option. You cannot have a social policy if you do not fix the economic policy. Obama has done nothing. And frankly, if he had 15 businessmen, somebody from private enterprise in his cabinet, I'd say, maybe he's trying. I don't even think he's trying. He's paying lip service to it. And he doesn't fundamentally understand how you create a job. And that's a challenge. And I have lots of friends who are big supporters of him, who are grossly disappointed. He's the wrong man. You need a different guy in this job at this time.
But is Mitt Romney as a person electable?
I think Mitt Romney is electable, for sure. I'm backing him. I think he will build a better cabinet, a bigger cabinet, and he will build a team that will address these issues. And I think he will bring the nation together. There's no question. Somebody told me this, and I'm probably going to go to jail for this, that there's been one cabinet meeting this year. And frankly, I mean, he's abandoned Washington. And he's basically done 250 fundraisers. I mean, this is not a way. This country needs a leader in his seat. When I ran Starwood Hotels during 9/11, when the world was ending, I was in the office every day. We are in the fiscal equivalent of a crisis in the federal government. You need your leader in his chair with his senators from both parties in a room finding solutions. You do not need an absentee landlord. And he hasn't even pretended like he's trying to get anything done in Washington. He's just given up.
Then if it's Mitt Romney's background and his business acumen that prepares him for a role like this, why is it that Bain and the private equity industry is under such attack, and should they be? Because maybe that is Mitt Romney's secret sauce to success.
Well, that is part of his problem, is that Obama has attacked success, in my view, financial success. I started with nothing. I'm fairly successful, but I did it using the greatness of this country, which allows you to do anything you want. And it's just about up to you. As somebody once said to me, we all get 24 hours in a day. How you choose to spend them is up to you.
Can I go back for 1 second, Barry, to the money?
Yeah.
Barack Obama, to your point, has spent a lot of time fundraising. Some people would say it's because he hasn't embraced super PACs, and the super PACs are doing the money raising for Mitt Romney. Now, that's a
I think it's a terrible thing,
completely
by the way.
different discussion. But the question I have for you is...
We thank the Supreme Court.
We have to live with that.
Right.
I think it was just about a year ago, you forswore against giving money, making political contributions. I think it was Howard Schultz from Starbucks, right, who had you sign up for that. Sitting politicians.
Right, that was sitting politicians.
Oh, a very carefully worded statement. Are you giving money to Mitt Romney?
To be true. Yes.
Are you spending money to see Mitt Romney elected?
Yes, I've supported Mitt Romney, yes. And look, I don't think, I think if you go 5 more years of $1 trillion deficits, we're not going to be in any better shape. And I think the kinds of investments that need to be made, I think the country needs a business leader. I mean, you need a CEO. China is a company masquerading as a country. It's doing really well, right? It has its bumps. They're misallocating resources. But they're rich, they have no debt. The people have no debt, and the government has no debt, and they have $3 trillion of reserves. And we're in a different position here. We need all hands on. Now, again, there's a lot of things that Republicans say I don't agree with. I think we have to cut defense spending. I don't know how you can where are you going to cut the budget if you're not going to cut defense spending? By the way, I don't think we use all that money well. So I'm willing to pay higher taxes too, but use my money well. So I'm somewhere in Never Never Land, but I do think that the message of divisiveness that attacks private equity, that attacks success, which I think Mitt spent a lot of time talking about during the convention, I think he's spot on. I mean, I made people who succeeded. It doesn't mean you're a bad person. I give away a lot of money, right? And most of my wealthy friends do the same and build universities, campuses, medical facilities, and enjoy it. It's the privilege of success. But it's not something to apologize for. It's something to emulate.
Then why doesn't he want to show us his tax returns?
I can't answer that.
Is that killing you, though? Don't you want to just see them? Don't you want to say, Mitt, it's okay to be rich. It's living the American dream. Show what's in there, bud.
I don't know the answer to that. He's not going to tell me.
How does it make you feel, though?
He's not going to tell you, but do you worry that those are going to be cement shoes come November if he doesn't tell us what his...
Democrats will use that as a cement shoe. And my guess is he's given a lot of money to the church, and he might think people might find the amount of money he's given the church to be significant. And there's a tax deduction when you do that. So, my guess is that's what's going on. And look, I don't think he broke any laws, for sure, but I don't think it's in his constitution as a human being, frankly. But I think he's made when I was running Starwood Hotels in the beginning, I said, I'll just post the numbers, and I won't handle the street. I'll just put the numbers up, they'll speak for me. I think Mitt's approach to the presidency is sort of similar. This is what I stand for. I'm a man of character and ambition and clarity of focus, and that's all noise. That doesn't matter. And I think he's trying to, in some way, elevate the conversation. I agree it's not optimal. I mean, but I'm not going to judge that.
Well, whoever succeeds in elevating the conversation in this country, we should applaud them. Barry, I think we need to continue this conversation. No. It's not going to be today.
He's like, no, finish.
But it will be sometime soon. Thank you very much for joining us.